The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Sorry I was gone for 2 days. If I need to apologize, maybe it was a vacation for you guys. Don't know. I was sitting with a bunch of lawyers for the past 2 days. That was interesting, to say the least. If you don't have a lot of brushes with lawyers, feel free to have a good time someday and hang out with a bunch of lawyers. I remember that Robert Cray song, "Tell Me a Boat Full of Lawyers Just Sink," and that was going to make him extremely happy. I always try to remember that when I get completely pissed off with him. I'm still trying to get my charts up, guys. I got back pretty late last night, and here we go. Let me see if we can get our S&P chart up at the first tier. I apologize for this. Here we go. And I think we're back in business. Okay. Let me get over here. All right. So let's just kind of review what's happened. The last time we talked, and I think Al's got our charts up now. The last time we talked, my camera straight. We had talked about, the bearish overtones of the breadth in the S&P market, along with a lot of other global indices. And we talked about some areas of concern. We talked about possibly passing on the longs right now, and waiting for some rallies to happen to possibly look at some of the shorting opportunities. And let me get rid of my taskbar situation here. Here we go. All right. And, one of the things we talked about a couple of very important inflection points. One of them was this 2060 area. That was obviously our weekly on for lows. And last time we talked, actually, on Tuesday, I missed Wednesday and Thursday, we talked about waiting until, we had a little bit of a washout below 2060, and we got back above 2060 for kind of a short-term bounce trade. I wasn't considering that this was going to be a 40-point bounce, but it's actually more than that. And what we based that on was getting below that weekly unfair low, and then kind of being able to gain some momentum, possibly to be able to, do some trading against the long-term trend down, that contra trade bounce, if you will. Now, the number we talked about waiting patiently until the market came to us was basically this 2085.50 area. And I was watching the markets when I was having all the fun sitting with the lawyers, obviously. And when we got into that area, we reached a high. I'm just going to give a little bit of a history lesson here, 2089. And we had actually a close at 2087.25. So, considering that the close happened above this area, I had a couple of orders in and quickly took some stops here. And we had actually a daily close above that kind of Maginot line, if you will, that we were looking at as kind of the fence from the bounce from 2060 up into 2085.50, 2086. That close was relatively important. So you got to wait, let the market come to you in a different way, either below that 2085.50, or go into higher inflection points. And what do I mean by that? So that's our daily situation. Here's our 240. And remember, 2085.50 would take precedence over, I'm just trying to catch you guys up for the last 2 days. 2085.50 had taken precedence over anything going on in our 240-minute time frame. So, what do you do now? I got stopped out once. There hadn't been really any ripe opportunities except the POC that we talked about, this 2102, and that's coupled with our 2104 up here. that 2085.50 into this 2102, 2104 area that we used before to kind of cross the bridge down below is now the level I'm looking at, again, to try to pick a battle just like we tried around 2085.50. All right. So now that we've gotten up here and we've actually gotten through overnight trading, we're trading 2100. I'm not actually that opposed to doing shorts actually in a little bit more leveraged way with a larger position, because we poked our head above this POC on our daily. Remember, wide boxes, you got to pay attention to the POC. We've gotten back down below it, and guess what? We've got some actually really good coincidental levels on 3 different time frames here. So we've got 2102, that POC on the daily, 2104 weekly unfair highs, and now we've got a 240 unfair high that we're kind of starting to migrate down below again. I didn't foresee this big of a bounce, but remember, they don't make it easy to short the S&Ps, and in my opinion, with some of the things that we look at, it's still not the worst situation in the world to start looking and picking battles on the short side. So what I'm going to do is, and we actually just, on a separate note, we just found a way, not found a way. In programming, you're always trying to find ways, but we actually, I think, in my opinion, found a much better way to be able to save custom lists in the scanner. I'm going to pull up our breadth. That started me thinking about the scanner. And the custom list situation, you're going to be able to click on your custom list just like you do clicking on the different indices or ETFs, and just pull up different sectors that you create, which I think is going to make it even more quick use and valuable as far as saving time. So what I'm going to do is I'm going to go to our scanner really quick, and while we're talking about this 2102, 2104 area, which is, 3 different time frames helping us out here, I'm going to go in here and I'm going to look at my weekly and daily situation. And as you can see, the dailies definitely got positive, but our weekly is still, we're still trading range-ish, if you will. And as we're looking at these different speed dials, I'm going to go back to our 60-minute. One of the reasons that we were able to, as I'm going to wait for that to populate here. Okay, here's our 60-minute. I just want to point this out. When we were looking at that contra trading, it's the long-term trend down, we always talk about these 60-minute crossovers, right? So I'm going to, pull up our date grid here. Tuesday's the 28th, Wednesday's the 29th. This is how powerful this is. This is our short-term breadth crossover situation that we always talk about as a system in itself. We had our short-term breadth crossovers happen on the 28th in the morning. Okay, so as we were talking about, let's wait until we get down to that 2060 area on the weekly unfair lows. You guys notice, and I hope you have this product and are noticing this, that we had that 60-minute crossover happen about the same time all that was going on, and we've stayed relatively positive. But remember, those longer-term inflection points kind of take precedence over a lot of this, but this is a great day trading short-term system in itself, as well as the 4-hour. Okay, so the 4-hour again crossed on the 28th. We've stayed positive. We're relatively positive, but remember, dailies are like this, and then kind of big mama here, or big daddy, however you want to call it that way. On the long term is still breadth, really mixed up and negative actually. So we've had our kind of short-term momentum move. We're gravitating back up into major inflection points on the charts themselves, 2102, 2104. We've reached that, and for short-term guys, I think you still, even without that 60-minute crossing over, and we'll have the market open, and that 60-minute will definitely give you more valid results based on the internals opening up, which is what that's based on. I think you got a nice little place that the markets come to you to pick a battle. And remember yesterday, just to point this out, we crossed the 2085.50 border. We came back and retested. So again, we didn't quite we reached the low of 2087.75 on a pullback from really up in the stratosphere, 2103, 2104. So remember, we those former resistance acted as support. And what I'm trying to say is, in the grand scheme of things, is it's really nice to let the market come to these inflection points. This is a case where we crossed the border, we came back, we didn't cross below that 2085.50, but it was an area of concern to wait patiently to either let it fall through or to do a contra trade against the long-term trend down, in my opinion. Right now, you got the trend in danger, just flirting around with this 2102, 2104 trend being set by the breadth overtone. But right now, you've let the market come to you again, and I think we've got some ripe opportunities around this 2102, 2104 area. So that's the situation on the S&Ps. Do we have to sell off? No. Make sure you put your stops in. But again, I think we've had a good little run up here, and we still got a mixed bag on the long-term breadth, and I'm not a fan that there's mega blue skies ahead, especially fundamentally speaking with some of the things out there right now. Whew. All right. It's been a crazy past 48 hours. A little out of breath here. All right. So we're going to go to my favorite trade here, the Japanese yen trade long. People ask all the time, so you've liked this since 100, now it's 125, basically. What do you do with it now? I'm still a big fan of just trading this on a very long-term view, letting it bounce around. This is one I think that you're going to probably just want to stay the course, but not get shaken out on a very stingy stop basis. So that being said, I think the stops are still below 123.39 on this trade. I get a lot of emails about this from a lot of people. And short-term targets, 124.47, but again, I think the longer term play here is to just let this thing bounce around, maybe trade it lighter on the position side. Here's the dollar, somewhat to some degree related to this. Here's the situation on the daily. US dollar, again, in my opinion, not to be shorted. Here's the long-term target right now, 99.51. I still feel pretty good about that. Remember, we're in the fair auction, right in the middle of the balanced area. Not a lot of bearish tones here going on in any other indicators that we look at for the dollar. Still a big fan of this thing continuing to ramp up. Here's the euro. We're just trying to cover a couple of usual suspects before we get into possibly, some decent stock plays based on the scanner, and also earnings related instruments that we need to take a look at relative to the scanner. Guys, we're going to be back in 5 minutes, and we're going to hit the euro and then get to stocks in just a little bit.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Are we back? Hello? Did we get... Seems like we got cut off. Okay, cool. All right. The music just chopped off. Sorry about that. Listen, we talked a little bit about what my, ideas are on the S&P. Obviously, we've had some shorter-term breadth crossovers happen. But on the long-term basis, there just seemingly is not a lot of conviction yet that, it's time to step in and start, buying stuff and leaving it alone for a couple of years. It's just not that type of situation, in my opinion, and the internals are still kind of telling you that. So that being said, we're going to go into still looking at possible shorting opportunities when we drill down into the scanner itself and try to use profiles to let us know what's acting a certain way, and able to try to pick off some things cheaply, if you will. Let's go back to the futures section of this. I just want to show you guys that on the S&Ps, there's that 2104 top of the box. There's the 2102 rounded off POC. That's a relatively wide profile. You can see all these. I mean, here's where the so-called level of the market is right now. This orange yellow line, to me, it looks orange. And we're kind of, here's that. So here's the inflection points lining up right here, basically. And you can get all that within the scanner. It's a pretty quick read. And, here's what we're seeing on the S&Ps. From a technical standpoint, it kind of gives you all the inflection points in that little, TAS speak, if you will. And when we go into the dashboard here, you can also kind of get a little bit of a dissertation here on the, I don't talk about this much because I'm the one talking, but it is something we put in to kind of try to give people a little bit of an automated text situation based on certain things happening. If-then statements, the way that's created, if you want to know, our programmers had basically taken about a 40 to 50 page list of if-then statements to try to create an automated text that's almost like an automated kind of real-time research report on the long-term, intermediate term, and short-term. I think it's kind of cool, but I think a lot of things are cool, so check it out. Let's take a look at some candidates here as I still get my screen straightened out here. Take a look at a couple of candidates after we look at the euro. We started on this a while ago. So here's the big number we were really pretty much focusing on, this 109.48, 109.50 area. This is our weekly view on the euro. Get to where I can manipulate this thing. Here's the long-term view, still, just hanging around down here, in my opinion, waiting for the next shoe to drop on this instrument. But it's okay to get stopped out of these things. It's okay to be stingy on the euro. It can run against you. I remember we went from 104 to 114 and above really quick. That's 1,000 pips. There is no way, in my book, if you're looking at a weekly long-term trend down and trying to hang with this long-term trend down from 135, which is where all this mess started from, that is an unfathomable situation to me to hang on to a short. So that's why we use some kind of demarcation lines along the way, allowing our dailies, which is our next time frame down, and even our 240s sometimes, to just kind of get us out of some of these situations where we've got to say uncle on the hanging on to the short trade. And we talk about those, but I think we've done a good job guiding this thing down, and we've actually had some situations where we've been able to go long. But right now, what do you do? The cool thing is you got that 109.50, 110, 12 area. That's pretty big, in my opinion. You're kind of in that little DMZ right now. You got some decent information down here on Navigator, which is kind of a rolling over type situation. You're getting bright red again here on our Navigator on our weekly, which means it's kind of building some spring-loaded action, in my opinion, on the south side. Here's 110.05 sitting top of the profile on the 240. So right now you're in a little bit of a DMZ. I'd love to see this thing get back down below 109.50 to really start pressing the gas pedal on the short side. A little bit in no man's land here right now, but I don't consider this a bad situation to use as a collection area to get short this again with stops above 110.12 based on your appetite for risk. All right, we're going to come back, hit a couple of stocks in the news, and also some picks out of the scanner.
Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in 1 index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease, no worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Obviously had our number come out. Euro's rallying a little bit here, and so the S&Ps. These are S&Ps just kind of rattling around. Again, got a big area, 2104, that we got to pay attention to. That's kind of where you, in my opinion, need to orient stops above. This is unfair highs on our weekly, which is a really big number, and we're kind of in that little DMZ 2102, 2101 into 2104. After that number, they just came out. We're gonna just, kind of, in my opinion, I love the way this is acting. Actually, the euro we just spoke of. Again, this is kind of what stops are for if you're playing this game. This is again the top of that range, 110.12. I think we've reached a little bit farther than we wanted to there. In my opinion, you now just got to wait until we get back relaxed. Let the market come to you down south. On the upside, again, this is a pretty good spike here in the euro. The 240s, there's really nothing to hang on to on the short side up here now. In my opinion, this thing could go another 100 or 200 pips north, so there's no reason to suffer through that. If you guys are trading this, in my opinion, you just got to sit tight. Here's the dollar situation. Obviously, I'm a big fan of being long the dollar, and we've had a little bit of a pullback here. Here's the 240s. I'm taking a long-term view on the dollar, by the way. Here's the 240s. That was short-term buy support, 97.09. Now, what do you do with this? I don't think this is a terrible reaction. It's not the worst thing in the world seeing this thing sell off like this. In my opinion, I think this is you've got a chance now that the dollar's pulling back into support. Where's that ultimate support on the intermediate basis? 96.10. On a short-term basis, you've got 97.0809. We're a little bit below there right now, so short-term traders want to see this cross the border above there now on the 240, and then also you've got that big-time support much lower around 96.10. I don't think you can do much with this right now on the dollar side. I think we've crossed some borders here on the short term and the intermediate. There's my taskbar again. How did that happen? Anyway, okay, so that's the situation on those two products we just spoke of. The yen's coming off a little bit, not much. I love the relative strength of the JPY USD trade. I love it. Shanghai, let's just hit that really quick. This is really interesting how this happened. We've come down to this 35.54. We kind of rattled around there. That was the target after we had. This is so neat to see these things like this. Market came to us. That's what we always talk about, and that's why we got to wait sometimes. It's hard to sit there. 4,200. Now we've reached the targets on the new profile this week on the downside, 35.54. I don't think you can really do too many things with the Shanghai right now. The good news is there's very bearish overtones with these little profiles that have started appearing on the Shanghai, actually above price action. That's very bearish, and that means that we're probably not supposed to buy that unfair low on the weekly. So again, Shanghai is more than likely going to head south, and I think the way to deal with that is just wait until we get below 35.54 and then start hitting the gas pedal. Right now, remember, that's a pretty big number. You got to pay attention to that. But you've got some really good help here with our dailies and these profiles outputting twice above price action, which is very, very cool for shorts. Treasuries, haven't been a fan of going short treasuries. This is kind of cool how this is happening. But, and this, when we really kind of get down to business trading, it's awesome to have kind of a scissors little trade situation going on with the notes or bonds and the S&Ps. And this is kind of one of those cool situations. If the S&Ps goes against you, if you're short S&Ps, you're long notes, or excuse me, short S&Ps, short notes, long S&Ps, long notes. That's said that wrong a while ago. And this is one of those situations that, your short S&Ps, excuse me, if you're long I'm going to get that right. If you're long S&Ps, long notes, or short S&Ps, short notes, that is a nice little equation to usually play from a portfolio management standpoint. And that's kind of held true again here. Let's look at gold really quick and crude, and then we're going to hit some stocks that I promised. Just not a lot happening here on gold. We had a little bit of a rally, about an 8-point move up here off of this 1080 general area. But again, I don't know. I mean, this, we don't want to be at this inflection point seemingly today, but, we gravitated back to it from yesterday, touching it pretty much to the tick. Here's the low, 1081. This is 1080 rounded off. We reached the low today of 1079. It's 1079.9, 1079.80. What do you do with gold? I think you're just kind of biding time in a fair auction here to stage to go lower, actually. This is normal action. It was kind of nice that this orange bar appeared and then kind of notified us that we're going to have a new demand area. But fact of the matter is, the long term, there's just no new news, and we've got some decently shaded bright red bars on our navigator, which is kind of indicating long-term momentum still on the south side. Now, these little herky-jerky actions on gold, here's 1094, that is a short-term selling point up top, and then you've got the cave-in below 1079. So those are the big inflection points on gold right now. Crude, very similar situation as gold. Here's the long-term on crude, nothing new there. Trend is still down. New profile, not wanting to stay away from these inflection points at 47.17. I think now the new selling point, we've talked about this 5109 here, that that's the kind of the rally in your face resistance area. We're in the fair auction. Here's the short-term levels 48.24 and 49.52. These are all in the scanner. I'm going to go to our futures section. So these are your battle point areas. There's that 5109. There's the 48.24, 49.52. Then you've got some short term. That's the situation on gold and crude. We're going to take a look at Amazon really quick first. All right, talked about, this is, obviously not the one to short. There's nothing to hang on to up here. It's kind of there's where your short-term support is, 522. We've been able to rally just a little bit. I got a couple of emails about that one. Let's go back to the scanner really quick. Let's go to our S&Ps. And let's consider to find weak stocks like we've been finding, the boring ones, if you will. There's the usual suspects here. Let's take a look at General Electric. This is one in an interesting situation I was looking at yesterday, actually, without you. All right, so markets rallied, obviously. I love this particular trade, actually, 26.21. That's the weekly unfair lows. The reason we're picking this out is because the scanner just kind of let me know we were in the vicinity. There's the bottom here, and there's the red 7. So what that means is, very simply, it means that first of all, that 7 means how many bars we've been below the current daily profile. Or in a trend, how many bars we've been in that trend. This is telling me, without even looking at the chart, this is telling me bottom 2. That means that this is the second week we've been below the bottom of the profile on the weekly. Now, if I go into this landscape chart, and again, this is pre-market, so remember, a lot of these things update extremely well when the thing starts trading. But, we're coming back, level of the market is right here, pre-market. Here's the unfair lows, 26.21 that we rounded off that we just talked about. So that means that we've been rattling around down here. We're coming back up into this inflection point, and I'm just going to show you, and you don't need these on your chart to show this, but here's the 7 bars. The cool thing is that a new profile appeared well above price action, okay? And we've rallied back with those bearish overtones of those profiles above on the daily. We've actually rallied back up, let the market come to us to 26.21. Again, it's a $26 stock. It's General Electric. It's a dividend play for a lot of folks, but you've got a trading opportunity here. The market's rallied. This one's, in my opinion, a very low risk situation. Stops above this area. And the market has kind of dragged this up a little bit here, and you've got some things on your side on the short side. So that's a nice little situation. Coals, let's look at KSS. Let's look at, again, some of the ones we've been monitoring, Legg Mason. Let's see how these stocks have acted in this little bit of a rally here. Coals, Legg Mason, L3. Let's take a look at Coals first. And again, remember, these stocks are in, trend mode down. So you're, again, trying to have the benefit of the market rallying, allow these things to kind of possibly bounce up into new resistance areas and either add more to it or just get short periods. 63.05 weekly unfair lows. And that's taking precedence over anything you see here on the daily. And here's Coles. Again, I just think this is a really, really nice short. Here's the landscape view showing you those inflection points. Here's 63.05. I'm sorry, I kind of lost my screen here. Legg Mason, this has kind of been one on our list for a while. Coles, you really, you want to let the market kind of come to you on that one, so we're not totally in the right situation there. But Legg Mason's a little bit different. In a downtrend, obviously this week we've rallied, which has been cool because it gives us opportunities again to short this. So coals, for instance, we weren't at the battle point areas yet. Around the 63 is going to be where we're looking at that as a ripe opportunity. On Leg Mason, we're very, very close to a target on the short side here. So we've rallied a little bit, 2 points from the lows. We're coming back up into some resistance, 49.15. Pre-market, we're trading 48.90. It looks like. Nope, that's not. It's not open this market this morning. 49.15. Almost there. That's where you're going to orient stops around. Let's take a look at the S&Ps, how this is panning out after this report. So the S&Ps are rallying a little bit. It's not the uncle situation yet, in my opinion. You're just kind of sitting around these unfair highs on the weekly. I'd sit tight, maybe relax your stops a little bit on that if you're doing some pre-market trading here. Just want to get a tone of that. There's the 10-year. I would keep this number on your radar screen. We're at that 127.11 on the 10-year. I'm not a big fan of this particular product selling off. I don't think this is a shorting opportunity. I think this is a target opportunity for the longs we've been talking about on the 10-year. And we've been talking about, we got some killer support here a while back. Now we're at targets on the 10-year. Not a big fan of shorting this. All right. Obviously some of these oil stocks, Halliburton, we're going to go down the list here of the ultra terrible looking things. Pitney Bowes back on the list. Procter & Gamble, let's take a look at that one. Been showing its hand again lately. Whole Foods. Let's take a look at PG really quick. All right, so Procter & Gamble, obviously, with the news out, Tom's been talking about this. This is not a pretty situation for this stock. We've actually been talking about it together. It's now showing its hand again. I mean, got a little bit of a market ether kind of move up, which was awesome to get into these inflection points and see how this acts. We break into the fair auction, we go back and retest the unfair highs around 81.22 this week. Now we're just in an ugly situation as far as a technical breakdown in a market that's drifting higher. This is, again, you had a lot of different signs here of rallying back up into these inflection points on the weekly unfair highs and daily unfair lows. What do you do with Procter & Gamble now? We'll talk about that when we come back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Here's Whole Foods. We're going to look at TLT in just a second. Again, had the news out yesterday. It was almost like, how can they even have any good news? I just think that the window for this company may have passed on how they're raping people on grocery prices. Yeah, I don't understand how the stock ever got going in the right direction for this company. Go in there and get a cup of coffee and a pack of nabs, and it was like $10 or something. I mean, it was crazy. Oh, they don't sell nabs. That's right. Do you guys call the crackers with the peanut butter in the middle nabs, the orange ones? I don't even know what they're called normally. That's what they call them here. Anyway, here's TLT. Somebody asked about this. Obviously, the used to be the Lehman 20-year bond product. I can't remember what they're called. I don't really look at this too often. The TLT, actually, it's okay. All right, so I'm looking at this. Obviously it's back in the fair auction. I'm thinking the 10 years might take a little bit of a break here, but support right now on the TLT, in my opinion, is around 119.50. That's the way I'm looking at this. I know we've kind of come off a little bit here, but it looks like we might have a little bit of a turn happening here on TLT. So I'm looking at this that, we've had a little bit of a technical damage situation on the intermediate, but you got some support around that 119, into 120.5 general area. I'd put stops down below there. I'm not a fan of shorting this product, even though we've come off of all-time highs a little bit here from 138. I'm thinking we can easily retrace back up into 125 on TLT. And I like the way during this change, John from Philly, during this process of this turn, I want you to note here that we've had lower lows on the TLT, but we've had higher lows on Navigator, and then we crossed zero back positive at the same time we broke these profiles up top. So it seems like there might be a little bit of a change in tide on TLT on the north side. So I think there might be an opportunity with targets of 125 up top. I don't know if that helps. Nobody cares. That's okay. International Business Machines. I said that to somebody the other day, and they were like, "What company is that?" Nobody ever says International Business Machines anymore. Here, in my opinion, here's your selling points: 163.20. Let this thing hopefully rally back up into that 163.20 area. Put stops above, and lay the wood to this thing on the short side. All right. So a couple other things here. I just want to kind of point out. I want to look at Yahoo actually. This company had everybody by the, and I don't know how in the world they screwed it up. Bad management. Here we go. 3802. If you're trying to bottom pick this thing, I think now you just got to sit on the sidelines. Is it a short? In my opinion, I think you've got a decent little opportunity with stops above 38.50 on this one. This one is interestingly enough showing its hand big time. I'm a huge fan of shorting Yahoo. I'm not a big fan of trying to bottom fish this one. Somebody was asking me about it in an email. All right, guys, it's good to be back. Thanks for bearing with me the past 2 days and this morning also. Stay tuned. Larry's next. You will thoroughly enjoy listening to him.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.